Welcome back to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me, after quite a long period of time, we've had Chris Powell with us in the past, but I'm really pleased that he's with us again. It's been a number of years, I believe. He is a columnist for the Journal Inquirer. That's a daily newspaper in Manchester, Connecticut, where he has worked since graduating from high school, and I believe that's a few years ago. Chris and I are not that far apart in age, so 1967, I graduated in 1965, so anyway, there you have it. Chris is also Secretary-Treasurer of the Gold Antitrust Action Committee, GATA for short. That's a nonprofit organization that aims to expose and oppose the manipulation of the gold market and related markets by central banks, and that's what we want to talk to Chris about today. Thanks for joining me, Chris.
Oh, my pleasure, Jay.
It's really good to have you with us. I've known you now for quite a few years, you and Bill Murphy, the founders of the Gold Antitrust Action Committee. Maybe since you haven't been on with us for quite a while, for those that might not be familiar with GATA, I can't imagine that would be a large percentage of our listeners, but if you could just give us a little background on how and why GATA was created.
We began back in January 99, Jay, really in response to Bill Murphy's commentaries at his internet site, La Metropole Cafe. He was trying to cover the gold and silver markets. He began to notice that they seemed to be manipulated, that there were smashes in the prices whenever certain key technical levels were reached. He originally attributed this to the major bullion banks that traded gold and the futures in New York. I bumped into his internet site and began reading his columns in late 1998, and I thought that there was a lot of evidence that he was right about the manipulation, but I thought he was missing something. I had some experience with antitrust law because of my newspaper work, and I wrote to him saying, look, it looks like you're onto something here, but if you're right, what is happening would seem to be against the Sherman Act and the Clayton Act and 50 state antitrust acts, and in that case, somebody ought to form a committee to hire an antitrust law firm to sue the bastards for triple damages under antitrust law. And if I told him if somebody wanted to form such a committee, I'd contribute $500. He thought it was a good idea. We formed the committee. Just through luck and happenstance, we were able to obtain an antitrust law firm to look into the issue for us. And the lawyers discovered that gold market rigging by the U.S. government has been perfectly legalized by the Gold Reserve Act of 1934, and which established the Exchange Stabilization Fund. The lawyers told us that if the real party in interest in the rigging was not a bullion bank or bullion banks, but the U.S. government, then the market rigging would probably be legal, and there was no way to pursue them under antitrust law. We continued to do research, and it increasingly confirmed that the real party in interest was the U.S. government and allied governments, and that probably the best, most we could do was to expose the market rigging. That we couldn't get it enjoined by a court. We could very possibly obtain documents exposing it, which is what we have done. We just continue doing that. We've amassed many admissions from Western governments of their surreptitious involvement in the gold market for price manipulation purposes. We've got documents from the International Monetary Fund and the Federal Reserve, for example, the Securities and Exchange Commission, the Commodity Futures Trading Commission. I think they all show overwhelmingly that Western central governments, Western central banks, continue to trade secretly in the physical gold and especially the gold futures markets for price control purposes. I think it's very easily confirmed. All you have to do is put a very specific critical question to any government agency that's involved in this, and you'll get the door slammed in your face. But there's lots of documents that we've compiled and posted on our internet site. We're glad to share with everybody. I think they establish beyond a doubt that governments are secretly trading in the gold market for price control purposes, just as they were trading openly in the gold market for control purposes during the years of the London gold pool in the 1960s.
Mm-hmm. Right, for sure. Well, Chris, is it directly the Fed, the government? Well, the Fed isn't the government, of course, it's quasi-government, but is it the government, the Treasury, or is it the big major banks that are connected to the government that are acting on behalf of the government in the futures market?
The investigation certainly comes out of the Treasury Department. Treasury Department controls the Exchange Stabilization Fund, which is the agency that is explicitly authorized not only to trade in the gold market, but the Exchange Stabilization Fund is explicitly authorized by U.S. law to trade secretly in any market in the world for any purpose that it might have. This is, quite astounding to me, but if you look up the Exchange Stabilization Fund page on the Treasury Department's internet site, you can see this is confirmed. So I think it starts with the Treasury Department, and it goes back decades as a matter of executing U.S. government policy, which is to maintain the dollar as the world reserve currency, which means pushing gold out of the world financial system. And there's, many records even on the internet site of the historian of the U.S. Treasury Department showing that U.S. policy for decades has been to suppress the gold price and push it out of the world financial system and prevent other countries from using anything but the U.S. dollar as the world reserve currency. So I think it originates in this long-standing U.S. policy. It's executed mainly at the direction of the Treasury Department, but the Fed executes Treasury trades. Other U.S. trades are likely executed through the Bank for International Settlements in Basel, Switzerland. The BIS is the major gold broker for most central banks. They are deeply involved in trading gold surreptitiously for their central bank clients. Every month, the BIS posts its monthly statement of account, which shows changes in its gold position, and which represents trading for its clients. If you ask, as GATA has asked the BIS, what are you doing in the gold market and for whom, and what are you trying to achieve there, the BIS will cordially tell you, drop dead. We don't talk about this stuff. You can go try to ask some individual central bank about it, and of course they won't talk about it either. But this is long-standing Western central bank policy that goes back to the London gold pool in the 60s. They used to control the gold price in the open. It cost them a lot of gold reserves that they had to disgorge from their stockpiles. Then in the 70s, they realized they could rig the gold market much more efficiently and much more cheaply if they did it with futures in a futures market. And that's really what has happened since the 1970s, that the Western central banks have underwritten the monetary metals futures markets and underwritten the immense shorting of gold and silver futures by their agent bullion banks. And the gold price, as a result, has not kept up with inflation for the last half century, largely because central banks, through the futures markets, have underwritten this creation of a vast imaginary supply of gold. The estimates of this are that there's only 1 ounce of gold now supporting as many as 100 ounces of paper gold that are trading in the futures markets for price suppression purposes. If you ever want an estimate of what the gold price should be, you can look at that ratio between paper gold and real metal. If people who wanted gold insisted on taking delivery of the real metal, or at least vaulting it outside the banking system, there'd be a short position of like 100 to 1 that couldn't be covered.
My goodness. So it's hard to say where the price would go then in that case. It seems to me, Chris, I don't know if it was some government officials that GATA confronted, but it seems to me, I recall, that, for propaganda purposes, of course, the officials said, well, we don't suppress the gold price, but we would have the legal right to do so. So I guess he's probably right.
The first lawsuit we brought against the Fed and the Treasury and the bullion banks and the BIS was in U.S. District Court in Boston in 2001. There was one hearing in the case. I attended it. Our lawyer, Red Chow, was suing the BIS because it was expropriating the shares he owned in the BIS. The BIS then did have some outstanding shares in private hands and was trying to expropriate them. Reg was arguing that the BIS wasn't paying a fair price because the BIS owned a lot of gold and was helping to suppress the price of gold and thereby undervaluing its own shares. I went to that hearing. There were a lot of lawyers there for the other side, including an assistant U.S. attorney, and the assistant U.S. attorney was moving for something called summary judgment, which is the dismissal of a case on the grounds that even if everything alleged by the plaintiff is true, there is no remedy at law. And the assistant U.S. attorney was arguing there was no remedy at law here because the Gold Reserve Act of 1934, as amended in the 1970s, gave the power to the U.S. government to rig the gold market exactly as our lawsuit had complained of. Now, that is the U.S. government's position, that without admitting that it was doing what we charged it with, the U.S. government claimed the power to do what GATA charged it with doing. Now, that's pretty good evidence, I think.
I think so. No question about it. So the reason is as I believe it is, Chris, let me know if you think it's really to convince the people that the dollar is as good as gold. It doesn't need to have gold backing. And then they can create endless trillions of dollars out of thin air and sort of out of sleight of hand convince everybody that they're dealing with something that's as good as gold.
Yeah, it's not just that. That's certainly the big part of it. It's to really neuter the primary competitor to the dollar is the world reserve currency by valuing the competitor and masking the inflation that has been created through the U.S. dollar supply. But it's broader than that. It's also a scheme to protect not only the dollar but to protect the value, the price of U.S. government bonds and other Western government bonds, and to control interest rates. And it's also a scheme to suppress commodity prices generally, to suppress the prices that would show up most blatantly in the consumer price index that would get attention in the news media and show up more in consumer prices. So it's really a part of a bigger scheme that the British economist Peter Warburton wrote about in an essay in 2001, which is on our internet site. Warburton speculated that it would really take only, I think he said, $100 or $200 billion for the Western central banks to control all the commodity markets through futures trading, and if they did so, they could maintain the value of their currencies. They could push all the inflation they were creating into financial assets. They could keep commodity prices down and prevent commodity possession from competing with government currencies. It's part of a much bigger scheme. I see this as the continuation of the ancient struggle between the producing and the financial classes. There's people who work for a living and create things and extract products of value from the earth, and then there's people who manipulate the currency and financial assets in order to gain control of real things, and that latter group has been winning for a long time.
Well, that's you might call them thieves, I would guess. And the idea is that it's certainly, well, going back to 1971 when Nixon detached gold from the dollar internationally, that was done, as I understand it, Chris, to allow the United States to be able to finance, that is, the government to be able to finance a war in Vietnam and increase its policies of socialism under Lyndon Johnson and Richard Nixon, without telling the American people they were going to have to pay for it. And now we see exactly what you're talking about: government and the banking system, the financial sector becoming extremely large. The middle class, the people. When I grew up in Ohio, those people are having a tough time of it back in the Midwest, where they used to produce the things. Farmers, the miners, the manufacturers, the farmers, I would say maybe not so much the inventors, but at least those people that are producing real things that we all need. It is really an immorality, in my view, that you can create money out of nothing. Essentially, it's theft, isn't it? Can you see it any other way?
Yeah, it is, but it's legal theft.
It's legal theft. The thugs have written the laws. Financial
interests allied with the government can do this. The people who run the central banks and the investment banks allied with them they're in control. If they control the currency markets, they control the valuation of all capital, labor, goods, and services in the world. And there's nothing else. If you can control the currency markets, you control the world. You control prices. There's a very interesting transcript of a meeting in Secretary of State Henry Kissinger's office back in 1974. He was meeting with his deputy, a guy who was from Connecticut, whose name I can't quite think of right now. But and Kissinger's deputy is telling him why the United States must persuade its European allies not to remonetize gold, not to increasingly use gold as part of the world financial system, because the Europeans now, Kissinger is told, now have more gold than the United States, and collectively they have more gold than the United States. And Kissinger is told by his deputy that whichever power has the greatest amount of gold can revalue that gold from time to time, and in revaluing gold can change the valuations of all currencies in the world. And whoever can control the valuations of all currencies in the world is running the world. Right then in 1974, the United States was doing that, but Kissinger was told that the Europeans now had the power to overturn the dollar and return the world to gold or something else, and to seize control of the currency markets from the United States, and that the United States had to prevent that. And when Kissinger understood that, he told his deputy, well, if they cross us on this one, we'll smash them.
Okay, Chris, with 3 minutes left, then let me ask you this. China, Russia, they're accumulating huge amounts of gold. China especially, not just the central banks in China, but the population as a whole. They've been very much encouraging massive importation of gold. What do you think they're up to? China, Russia, Iran, you might throw in there. The adversarial nations of the United States.
Yeah, the United States has been throwing its weight around in a very bullying way increasingly over the last few years. It's weaponized the dollar with sanctions. It certainly seems as if some powerful nations and some small ones are preparing to get out from under control by the U.S. dollar. Now, I don't think any country, including the Russians or the Chinese, wants to return to a gold standard, but I think they realize that they have the power to devalue the dollar effectively and to gain strength for themselves through gold, because gold is enormously undervalued because of the paper gold short position floating around the world today. They want to get out from under the U.S. dollar imperialism, and I think they're planning to do that. I always cite a speech given by Oleg Mezhevskov, who was deputy chairman of the Russian Central Bank. He gave a speech in Moscow in 2004 to the summer meeting of the London Bullion Market Association meeting at the Kapinski Hotel in Moscow. The only words of English that the deputy chairman of the Bank of Russia spoke were Gold Antitrust Action Committee. That was pretty interesting because, to the best of our knowledge, in 2004, we'd never had any contact with anybody in Russia. Turned out the Bank of Russia was watching us very carefully. And the effect of that speech by Mezhevskov was the Russians telling the London bullion bankers that Russia was now on to them. It knew what was going on with gold leasing to suppress the gold price and keep commodity prices down. And very soon after that, President Putin ordered the Bank of Russia to start obtaining gold on all markets in the world. So I think we alerted to the Russians, at least, to the gold price suppression scheme. We may have alerted the Chinese.
All right. Well, Chris, we're just basically out of time here. I guess for our listeners then, and for everybody, for citizens as a whole, if you find something that's extremely undervalued, you might think about acquiring some of it.
Well, I don't know what the schedule of the central banks around the world is. I am very confident they will revalue gold upward at some point. I'm not so confident I will live to see the day. I hope I do. But if maybe if you're under 50 or so, it's a pretty good bet.
Well, it's all in God's hands as far as I can tell. I don't know of any politician that has complete control. Thank you so much for the time, Chris, and for updating us on this. And the site where people can go to, GATA.org, is it?
Yeah, that's right, GATA.org. We run a little daily newsletter there that you can subscribe to if you want to. And, of course, we're always glad to get contributions.
Absolutely. Thank you, Chris, for your time and sharing your thoughts with us today. We'll look to do it again sometime soon.